Well, good evening, all. I'm Epstein, and here we are with your SPDR ETF stock market wrap-up for Monday, the 18th of December, 2023. A week from today, it's Christmas Day. So you're going to have trade that just keeps falling off every day. You'll see markets where you hit your screen. I did today. Is it working? I didn't even know what was going on. Prices just weren't moving at all. And you'll run into that now. So the mentalities here. Events are happening. You saw that Apple made a huge announcement that instead of trying to settle with the company it lost a patent to, is pulling its Apple 9 watch and its Ultra 2. So if you want one, it goes off their website the 21st. The stores will not have them for sale. If you have one, they claim it'll continue to work. I don't believe that at all. I think it'll work, but when the update comes out, that feature they lost a patent on will stop working unless they, in an appeal, win. They certainly didn't want to go with the company that they lost to. That's evident. They had the CEO of that company on CNBC, and he said he's not received one call. He thought he would, but he didn't get any, and Apple's just the biggest thing out there, so they'll rule the game the way that they want. In the Red Sea, you know that we've now got a new problem in that the Houthis over the weekend sent up a number of different drones to strike commercial trips, and they hit them last week, a number of ships. And now you're getting the reaction. The insurance companies don't want to insure at the rates they were. They want a lot more money. The people are saying, okay, enough. British Petroleum began it today and said no more tankers going through the Red Sea. They're being diverted. Well, right behind them was one, I think it was a Norwegian company for their oil, not going through either. And then all of a sudden, Maersk and all the other commercial companies, they're not going either. So where are they going? You realize how many thousands of miles it is to go the other way? Because if you go through there, you can get to the Suez Canal and travel. Open up your map, you will understand what's going on. So there is a coalition there made up of the United States, the UK, Italy, Spain, the Seychelles. I know I'm missing a couple of other countries in there. They're there, though. And what do? That's going to be the big issue. They should warn probably the Houthis, and then maybe they go in and they have the missiles. They can just go in and blow up areas and just say enough is enough. Will that stop it? Who the heck knows? Will that get you into another quagmire of the war? I don't know. I'm not a military tactician. But we're at that point because once you start hampering the world trade on a small nation where they're housing these, what we call militants, and now they're hampering all the free trade in the Red Sea, how long do you think that's going to be allowed to go on? So you put it together. I know what I would be doing, but I'm not in a position of power. Thank God. As for the rest, just understand the thinness of the markets. You're going to get a series of reports. You got the Bank of Japan tomorrow coming out with their monetary policy. We get the Reserve Bank of Australia coming out with theirs. Now, one of the markets I'm looking at is Redfin. You know, Redfin reminds me, and don't get me wrong, of a market that got terribly beat up with the whole real estate. And is real estate going to come back now? My prediction is that we have seen the worst in the real estate market in terms of high interest rates, number one. Number two, the question is, will there be a lot of property that comes back on the market? Because, frankly, just under 7% mortgages, you think that's a bargain if you got a 3.5%, 4% mortgage? I don't think so. So I don't know that it's going to get anybody to move in quantity that you want. It will get some sales. And I am not of the opinion, like so many others, that all that property will come on the market and break prices. I don't think you're going to get all that property to come up for listings. And the ones that do, they're going to have to price in because they realize they got to pay up for a home. So, and they're going to have a higher mortgage if they get another home. So I don't know. I'm a commodity background guy. Supply-demand doesn't work all that way. In a perfect world, yes, you got lower mortgages, people want to move around, they're going to give you more supply, it'll break that because of blah, blah. That's assuming people will move. You have a gap in the chart. Are you going to fill it? Or are you going to play here and then get another gap to the upside as a breakout? That is what I'm looking at. Gaps often get filled, but here you had one. You didn't fill it. Here you had one, but you did come back. So you generally do. I mean, if you're a true chartist, you know that they generally do. But if from here, for any reason, you just hang around a few days and then gap up and leave another one, that's a powerhouse. It's like putting an afterburner on a rocket. The market often tries coming up. Could you go back to the $12, $14 area? I think you could under that scenario. But let's cover right now and not worry about how Redfin does. The trend is up, higher lows, higher highs, but it's already come up from a low of basically just over $4, and it's gone up in value with the high that we saw last week of 2.5 times that price. That's a heck of a run. Number two, you've got a point where the market has got the 18-day average and you have stayed over it. Once you've down here flipped back over it, what I teach is you often challenge the 18-day average of closes. That is what sets up the bias in the market. My theory, doesn't mean you have to agree with me, is that when you're over it, you have an automatic upside bias. And if you get buy signals on swing lines, that's a go signal. And then you look at momentum, where's the resistance, so on and so forth. Well, this has been a go signal. You're going to get another positive now. Tomorrow morning when we reopen, the math is going to make the 18-day average get over the 100. The first prints of the morning will be that way. Just the weighting of a 100-day average and an 18. You're going to drop this one back here, have a higher value there. The math is going to take care of it for me. What had been resistance of the 200-day average didn't matter 3 days ago. You just gapped over it. Today you came back and found it as support. So my jaw went, that's interesting. Wow. Generally you get over it for a short period and you have a problem with it. Number two, why did the market pull back like it did? You only stay, if you understand Bollinger Bands in any manner, over them 5% of the time. So when you get over them, I am not saying that the market, when it gets over it, cannot get there and just go for a couple of more days, but it will pull back typically. When I take a look at what's going on in momentum, you are on the verge of losing the bullish embedded reading. So if the red line closes under 79, then I think you're going to come in here and potentially fill the gap at least. I don't know if you'll get back to this number. We'll find out. You're right at a cusp. Tomorrow's a super important day. It's that simple. Rivian, I love Rivian. Today I counted 5 Amazon electric trucks. And I look at them and I see the sides, what they are and how this works and the drivers in it compared to the old ones they have. There's no comparison. And, there's more companies now that are going to buy it. I think the U.S. government should buy them for postal workers and so on. It's a perfect fit. And I don't get why they don't. Of course, we're broke. We're spending money on everything but taking care of America, aren't we? I mean, let me think about this. The border's not resolved. Ukraine is not resolved. Israel's not resolved. Congress is broken. They've gone home. The Senate is here doing what? What do you senators think you're doing? You're not going to make a deal amongst yourselves. Nothing's getting done. And folks, you got to get nervous because when they come back, how are they going to get a budget done, let alone get these other deals done? I mean, these are rough. What are you going to do on the budget? Because the Republicans are going to sit there, and if they have a brain of bottom, they're going to make the election that they don't want to keep spending all this crazy money. That doesn't mean they won't give money to Israel, Ukraine, and the border. But for the rest of the budget, the battleground's going to be monstrous because I'm voting. You got to stop all the spending. We can't afford to have the Treasury every single day running these monstrous amount of auctions, paying 5% interest, and think you are going to resolve America's problems and get ourselves balanced again. You got to stop the spending, whatever that means. You can see you've got yourself 3 days over the upper band. 5's about most you normally go. You are embedded, so it's bullish. I am not in any manner in the bear camp, and you're getting dangerously close to a market that wants to run. Now, what do I mean by that? The 18-day average has got its eyes on the 100-day average. So as it got over here, you can see as it approached it, you had an acceleration. I'm not the only person that understands moving averages. They saw that coming out. Away the market goes. Obviously, Rivian got a big order right through there, and that's another thing that helped the market. But all this comes to play. UGA, the gasoline fund, well, it's up today strong because gasoline, crude oil, natural gas all got a bid today once the Red Sea situation happened. It changes an awful lot, and you can count on that. In the financial services, you're up very high. It's a market that is primed that if you lose the 18-day average in red, you probably can have a real nice quick break in this market. We'll see what goes on. One of the things happening here is the market is having every day now different Fed members come out and talk to the press. Almost to a member. They are walking back how aggressively dovish Fed Chair Powell was at the Wednesday meeting. We're not going to have another rate hike. They don't see that on the horizon. And talks are beginning about when the cuts are going to happen. To a person, except for Mary Daly, from what I was reading, most think, forget the first quarter. She might even think that, all right? The second quarter, I think, is very much in play if things continue to play out this way. What you can't have is this Red Sea incident kick up inflation and energy and get things even worse. And that could, if you will, upset the apple cart. So you got to keep your eye on what's going on there. In the industrial sector, you still have the embedded reading, which tells me on pullbacks, the pros are buying this market, and they'll be looking for it to get back to the upper Bollinger Band. In AMC, I told you I said it back here as you were just developing this action, that you weren't going to go anywhere right now. And I said, I think you've lost this Christmas season. The movies just don't look that compelling. Willy Wonka did $39 million this weekend. That's not blockbuster stuff. Come on. So we got, I think, Ferrari and Aquaman coming out. The real good stuff's going to hit at the end of the first quarter, and then you get into the summer, and that's where this comes alive. But this won't wait for that. I think you are building a base here for whatever the next move is. In RSPD, the consumer. So where are they? They're still alive and well, and best I can see, they're shopping. I went and I was at Ulta the other day for my wife and one of her gifts, and to make a long story short, lots of help, lots of customers in the store where I was at. So I was impressed with that. Higher lows, higher highs, still very bullish as I see it. Then we come to the home builders, and profit taking's coming in, as it should. Number one, you were over the upper band. You haven't lost the embedded reading, so I'm not telling clients yet to come out of everything, but I did tell them, and I'll share this with you, when they put on their positions back right through here, and if you're a subscriber, you know that I'm saying it, and I have the videos to prove everything, and I started saying we want to take half profit and then another half and get down to a 25% position because you may lose that reading. And if not, and the market gives a good break, you'd have buying power to take a look. But I also expected, after listening to the Fed chair, that there's going to be blowback against what he said. And I think that's what's weighing on the market as well. On the energy sector, you tried a good rally today, but by the end of the day, this was a pretty big failure. I mean, the market went to 85.41 and finished off the day 12 cents lower. That doesn't act like a market on the energy sector that really wants to run at this point in time. The metals didn't run off the Houthi event, did it? I don't think so. 85 cents higher. The trend is up. The bias is up. But if you take out Friday's low, you're back into a problem of just stuck here. So if the pros are buying, I think they're closing their eyes. They bought today. They'll put a stop, I think, right under Friday's low. And that low, we can even go to it. It's 186.82, and if it takes that out, I think they have to rethink. You might even get into a bearish part of the market. You can come down here because that would give you lower highs, lower lows the moment it happens. Doesn't mean it would finish the day like that. And I'm going to be very careful with you. It is thin out there. Follow through. The pros aren't pushing the way they do. The big money boys have made their year. Whatever that year is, they're not going to blow it in the last 12 days of the year. If you think so, boy, are you wrong. SLV, lower highs, lower lows, battleground here. But I think if you get over 22.18, you get a reverse of what gold has done. You get a potential buy signal. All you got to do is hold on to that. Then you'd have higher lows, higher highs, and maybe you're opening the door to come back up there after getting an oversold in a big correction. In the copper market, nah, you own it. I wouldn't own anything up to the Bollinger Band 200-day average, the first move. That's for my enemies to own. TLT, you still are in a bullish configuration, but I hate, with a capital H, the first challenge of a 200-day average and a Bollinger Band together. My experience, and that's all that I can go by, all right? My many years of experience has been that the more I learned about moving averages and so on, first challenges of that, not the place to be. The first challenge of a 100-day in it, you often fight a battle, and here it was won once the market started making new highs, and especially when it was embedded. That was it. Now you're still embedded, so I have no business being even thinking bearish, which I'm not. The question is, can it stay over the 200? That's it. It is a bull market by every stretch. Look what they did to the dollar. Look what they did. They just destroyed the market. I thought it was a bad quote. And I looked at my service and I'm going, darn it, they've got a bad quote again. And it happens in services. So I went to 2 other charting services. Same quote. So what this market's done is it basically just fell apart. It didn't even pay attention to the 200-day. This market has repriced what the U.S. dollar is off of this interest rate talk. And here's where I got confused, and I admit it. The FXE didn't jump like that. Remember, the dollar index, just the index that makes up the UUP, is weighted 40% of the index is in the euro. That didn't go up very much, 0.27%. If we come to the dollar, it was down 6%. So you can just see the market's not liking what it is saying with the dollar in there, and that's where your game is. Now, talking of the dollar, my special report goes off tomorrow. So if you want to see my special report on the U.S. dollar, now let me tell you how I did this report. I first went in and I realized we have COVID, had COVID, have COVID. It's still here. And call your doctor, see how the hospitals are doing. You're still here with it. But it's nowhere near what it is. The U.S. population has either gotten their immunities built to it to a degree, they've got vaccinated, there's different things. But in any case, I looked at the report and I said, what does that mean for the dollar? Where's the dollar fit in and all that? So my special report first, when I went into the historical part, I said, I want to see the past 5 years because that really weighs heavier than the 30-year, the 15, but I want to look at all. So I show you the seasonals for all that. Then I'm going to walk you through some of the fundamentals. We're going to talk a bit, what's there, the general analysis, what the market does at this time of the year. It's all in video. And then I walk you into the monthly chart, the first chart, I believe one of them, then all weekly. Then I walk you into the daily charts. So you get to see what the dollar index is doing there. And then last, I'm going to walk you into what's called price counts. You're not going to get price counts, any other service, but from me and or the Linn group that I am part of. It is proprietary to us, and it's what we do, and it is neat. It gives you an idea where a market might go after a trend is kicked in. It isn't a trend predicting. It is a price predicting tool once a trend is kicked in, and it also tells you when the trend is ended. I use it all the time. So get to look at it. It's a free report. It's probably 12, 14 minutes long. It's a video. You go to our website, iraepstein.com, under the word research. You can move your cursor to the top here. You can do it that way, or you can call. We've sent emails. If you're on my mailing list, look in your spam and so on. I'll probably send one more in the morning, and that's it. The computer decides what time on Tuesday it comes off. So if I were you, I would look at it sooner rather than later, because you're going to say, hey, I missed it. Can I look at it? And I'll answer that for you now, as much as I'd like to have the holiday spirit. No. All right, I'm Ira. You have a good evening. I'll see you all tomorrow.